Let's also welcome Mohit Gang, co-founder and CEO of Moneyfront. Hi Mohit, a very good morning. Now Mohit,
Hi, Suyash. Festive wishes to you and your viewers.
to you too, sir. Now, since November, Mohit, the overall texture of the market is, looking extremely positive. I'll ask you the big one right off the gate. Can we make a new all-time high in this exuberance of in November that we are seeing?
Suyash, look, yes, honestly, I think the way the momentum of the market is, and I think after the FOMC meet and after FOMC holding the rates for one more quarter, I think the market sentiment has turned extremely bullish. Just that one small signal from FOMC has led to the US yields decreasing from a peak of almost 5% to 4.5% today. It's a 50 bips decline in less than a month kind of a time frame, which is massive, right? And which has led and fueled a global rally across, including S&P and Nasdaq. And Indian markets are obviously not aloof, right? So we sink and sail in tandem with the global markets. And uh, given that the Indian fundamentals, the Indian domestic story has been extremely robust. The result season has been fairly good. If you see the result season, the profitability of almost 3,500 listed companies is increased by 41%. The PAT, which is a huge significant jump. Though the revenue growth has not been fairly significant, but the overall PAT jump in this result season has been fairly robust, and the consumption story goes along, and the DII story along with that, I think, is leading to a massive rally in the markets. Plus, the pre-election mood is also kind of bullish. So yes, to answer your question, markets can make an all-time high in this given rally, given the sentiment and the DII flow in the market is fairly strong.
Now, Mohit, since you touched on the September quarter earnings, I mean they have been fairly robust, but one thing that stood out as a negative for me was the rural demand, which was still lacking. We saw it in the results of Mahindra and Mahindra, where tractor sales had taken a hit, in the results of FMCG, where volumes took a hit as well. I mean, consumption is still lacking, at the bottom of the pyramid. But given that Q3 is a seasonally strong quarter for us, given the festive demand and the wedding season, do you expect any sort of a reversion over there? Does your channel check suggest any sort of a reversion?
Suyash, I think it's a very pertinent question, and that has been puzzling to the economists on a whole. That the rural recovery has not happened that fast as the urban recovery, right? But as you rightly pointed out, the harvest season is going fairly decent this time around. The festive season has been a little delayed this time. If you see, the Diwali has fallen in the middle of November, so the festive season has been a little delayed this time around. As the marriage season now follows from November 23rd to almost middle of December, there are 35 lakh weddings. A massive number, and it's a record of all time, right? So I think the seasonal demand and the rural factor will perhaps kick in this quarter, which is what everyone is hoping for. So my sense is we should wait for this quarter to actually figure out whether the rural demand has picked up or not, but all indicators suggest that the rural demand will pick up this quarter.
All right. Now, talking about exuberance about Indian markets, Mohit, for the very first time in nearly a month, foreign institutional investors have returned to the markets. They bought equities worth about 550 crores or so, in Wednesday's session. And I mean, the question really is, whenever FIIs return back to Indian markets, it's a bank that rally. Can we expect the same this time around, given that the valuations, at least for the private banks, look relatively cheap?
So yes, I think banking is a lead indicator of the overall economic story. So my sense is the lead banks of the country, the bigger private sector banks, they've not been performing that well for last one odd year. The likes of HDFC, ICICI, Kotak, Axis, they've all given single digit returns or low returns or not return, no returns at all for last one year, right? So my sense it's a long overdue kind of a rally. So banking perhaps will lead this pack. And we are also fairly bullish on the IT pack overall, Suyash. I think with the yields falling off, the yields tapering, and the chances of a rate hike reducing further, IT pack from here on in a year and a half should actually outperform, given that it's been a relatively laggard for last 1.5 year again.
I actually wanted to touch on the IT pack because my question was it a one day sentimental sort of a rally that we saw because the inflation print from the US was benign in fact, but I mean, how do we rally from here on? I am talking about the IT pack because demand is still lacking and there are talks of US slipping into recession by the second quarter of 2024.
True that, Suyash, but honestly, I think IT has been a massive underperformer for a long while now. In fact, the large cap IT names, and when I'm talking of IT, the large cap IT names, the mid cap IT has relatively done better. The large cap big names, the big four or the big six of the IT pack, have just not delivered for last quite some while. Now the whole thing is when the US rate cycle starts reversing, which
Hmm.
it will perhaps by next year or next financial year. I think that's the time the IT pack always does well. When the yields reverse, the IT pack relatively shows its strength. Somehow there is a negative correlation out there, and I think that should play out. By next financial year. So I think it's time that one can start positioning a trade in the IT pack, not to a very large extent, but gradually building up the position to kind of make to kind of avail of the benefits when the yield cycle starts reversing both in India and the US by next financial year. So and plus it's also a relative valuation game. So look, all the IT biggies, if you see, they're sitting on huge loads of cash pile. You see TCS going for a buyback right now. Infosys has always been sitting on huge amounts of cash. So strategically, these are efficient capital allocators. And once a company becomes an efficient capital allocator, it can't fundamentally go below threshold P level. So my sense is de-rating has happened to a large extent. There's very little chance that the sector will de-rate further from these levels, right? If given the stable valuations and given the stable earnings trajectory, I think the pack should turn around by a year or so.
Any particular stocks that are looking attractive in the IT space?
Look, all the large cap names out there, honestly, though these might not be like relative chart toppers as you call them, but they should give reasonable and modest returns with a year and a half kind of an outlook. And the top two out there, I think, lead the pack. Both Infosys and TCS have massively underperformed, and I think it's time that the biggies, the large cap names, not just in IT but also in banks, should lead the charts.
All right, TCS and Infosys it is. Sir, I also wanted to pick your brains about this US recession narrative that is once again, picking up. I mean, for the benefit of our viewers and for me as well, could you explain us why this chatter is again picking up? Because inflation is coming off nicely, both on a wholesale level and at a retail level. I mean, there is like economic indicators are showing that US economy is resilient. So why is there a chatter of perhaps US slipping into recession?
I think, look, it's all about how the economy lends or how the Fed allows the economy to lend, whether it's a hard lending or a soft lending. The rates have remained elevated for a fairly long while, and whenever the rate cycle remains elevated for a fairly long while, the lower strata of borrowers will go through a massive churn, which we have seen in few of the US banks going belly up. We have seen and you will also see the lowest strata of individual borrowers defaulting and a lot of credit card defaults happening out in US. There's already a lot of chatter amongst the credit card outstanding at an all-time high levels on the personal individual borrower front, right? So I think whenever the rates remain elevated, which it has been for a fairly long while, and there is no indicator that the rates will come off very sharply. Rates will come off. Perhaps we are at the peak of the cycle, but how fast will the rate come off? Again, there is no indicator or there is no likelihood of a quick rate cycle reversal out there, right? So whenever this kind of a scenario happens, honestly, I think the whole debate is uh, how will the economy recover fast, whether it'll be a hard landing or a soft landing. The debate is still split wide open. If the rates remain elevated for a fairly long while, you might as well see a hard landing for the economy, which will not augur well for the global economy also, not just for US. But if there is a soft landing, which means that if the Fed tapers off, if the Fed reduces the rates gradually and starts reducing much in advance, then perhaps you might see a soft landing for the economy, and that in turn should augur well for the markets also.
All right. Sir, shifting focus from global markets to the primary markets, and I know you have always advised caution, at least on the show, before looking into IPOs, but we have a big one lined up for next week, the much awaited IPO of Tata Technologies, the first by Tata Group in nearly 2 decades, open for subscription, next week. The price band has been fixed at around 475 to 500 sort of levels, at a valuation of about 20,200 crores. Mohit, valuation wise, is the IPO fairly priced?
Look, Suyash, I go with how the PE investors have entered in the stock, right? In the month of October last year, TPG bought stock. Actually, there was chatter that the stock will go for listing last year when Tata Motors was about to offload around 9 to 10% odd stake, but finally it didn't materialize because the entire chunk was taken up by TPG at that point in time. They entered at a valuation of 16,300 crores, right, which is a year back kind of a thing. And from 16,000 odd crores, the valuation today at the cutoff price will be somewhere in the range of around 20,000 odd crores, which is a 25% jump from there on in a year's time. Look, honestly, but you can, as retail investors, as individual investors, we can never try and chase what the private equity guys are chasing. To me, I think it's reasonably priced. Given that the stock and the company enjoys a fair bit of domain expertise, has been a long with a good track record, good revenue, what do you say, order books, and good profitability and margins and everything at around 31 times, which is what the P should be for FY24. It's a reasonably priced stock, given that the competition is more expensive in this domain, which is the mid cap IT space. If you see the peer group names, they are all quoting at a slightly higher valuations, whether it be L&T in that space, or whether it be KPIT, or a few other names, right? So I think they have obviously the valuation, I think there is a lot on the table. Plus, also, if you see the unlisted price of the stock was quoting almost at 800 to 1,000 rupee in the market,
Right.
which obviously was unreasonable and absurd. But at around 500 odd rupee kind of a price, I think it's a reasonable buy for long-term investors. I think it's a fairly good issue to subscribe to.
Now, Mohit, I was looking at the details of of the IPO. It's a pure offer for sale. Now, is this something investors should be concerned about?
Look, Suresh, offer for sale, a pure offer for sale is always a cause of concern, but perhaps not in this case, because out here, if you see, Tata Motors per se is kind of offloading stocks, and plus few of the private equity players and some of the lead promoters. So I think finally, look, the company doesn't need so much money for its own. You can look the company's balance sheet and P&L and see whether there is enough money for the company to grow further and expand from these levels. So perhaps I think from those fronts, the company is fairly well fortified to my understanding, right? OFS is an issue when you see the internal accruals of the companies are not much, and the promoters are trying to or some few individual promoters are trying to dilute their stake and raise some quick cash. In this case, I don't think so that's the story. So out here, I think it's a good opportunity for retail public to enter this stock, which has always been an institutional play thus far, right? So I think it's a good opportunity overall.
All right, that's a view from Mohit Gang. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.
My pleasure, Shush. Thanks.